Hey everybody, it's me, Gregory Mannarino. How are you today? It is Monday, June 25th, 2018. People, let's start off with this. As I am doing this video blog, stocks are down across the board. Let me also say, if you recall, on Friday, stocks sold off as well. When you get a Friday sell-off, which continues through to the following Monday, that's generally not such a good sign with regard to the stock market. Now, if you recall, again, there was that eerie quiet in the market. I did a couple of videos. I spoke about this last week, and now we're seeing this. So the market definitely was anticipating something, and now we're getting this significant sell-off in the market right now. I mean, it's not off the Richter scale, but it's significant enough, especially because of what is driving it. Now, this is going to fly under the radar, what I'm about to tell you. You're probably not going to hear a lot about this from the mainstream financial channels, especially. You will not hear this from the president, what I'm about to tell you, but I'm going to urge you to go look it up. Or if you follow me on my social networks, I put a link to this on Facebook, Twitter, LinkedIn. We just found out that a major economic indicator, it's a significant one, the Chicago Fed economic indicator, just went negative for last month. So I guess they're not getting the memo that we're in an economic boom. Look, I think we all understand that. Again, this is just rhetoric when we hear about how amazing our economy is doing. All that is going on here is companies buying back shares of their own stock like we have not ever seen before on cash which has been repatriated to our country. Again, no questions asked. These companies are now buying back shares of their own stock to not so much return profit to shareholders, because all they would need to do is raise the dividend. I explained this to you, but to, again, keep the illusion real that we are in a great economic recovery. We are not. It's still being called a recovery. I mean, here we are 10 years after, more than 10 years, excuse me, after the meltdown of 2008, and we're still under recovery. Meanwhile, we're supposed to be having like these really great numbers with regard to the economy, of course, except for the Chicago Fed Index and a couple of other things. It's just too crazy. Look, the money velocity is still on the toilet, and you cannot have an economic boom without cash moving through our economy, period. All right? Look around you. Look around your own neighborhood if you live here in the United States. More and more people on the street. Unfortunately, people who are needing assistance, it's just craziness. But again, we're supposed to be, believe that, things could not possibly be better. But then we get a piece of economic news like this, the market gets hit like it is right now. Interestingly, in the midst of all this, the U.S. 10-year yield, I'm sure this is not shocking to you, has dropped. Cash is moving into the bond market, maintaining that environment of risk. Gold is down, silver is down, the dollar is actually down a little bit. We got to keep our eye on this. Again, when you get a Friday sell-off with a Monday follow-through, that's not generally a good sign, and I think you and I were both seeing this in that eerie quiet that we had in the market just last week. Market knew something was about to happen, and whammo, this is it. So I guess there goes our the whole theory about the booming economy here in the United States. But I know you were well aware of that our economy is going nowhere fast. All that's going somewhere is rhetoric out of the mouths of our politicians, which is always the same story. Anyway, all right, everyone, let's take this up at the end of the day, and I promise you it will be lovely.